Good afternoon, everyone. It's 4:01 on my clock. Apologize for the slight delay there for starting today's meeting. My name is Eric Alis. I'm an Assistant Vice President of Operations with Farm Credit Services of Mandan. I'm just going to ask everyone who's currently logged on and in viewing to sit tight for another minute or two as we allow just a couple more moments or minutes for anyone else that's attempting to log on to today's meeting to join. So just sit tight. We'll be back in just a minute. All right, we'll go ahead and get started. I want to welcome everyone to the 2021 Farm Credit Services of Mandan Crop Insurance Update Meeting. My name is Eric Alis. I'm an Assistant Vice President of Operations with Farm Credit Services of Mandan. I work out of the Dickinson office. Sure nice to see some sunshine out today and some warmer temperatures. I'm sure it's been being welcomed by everyone. I wanted to just take a quick moment to thank you for those that are logged on and are participating in this meeting. I want to thank you for your business and for your continued patronage of Farm Credit Services of Mandan. We sincerely appreciate your faith and trust in us when it comes to entrusting us with your crop insurance needs. And for any of you producers out there that may not be presently customers of Farm Credit Services, we certainly welcome the opportunity to visit with you here in the coming days or weeks prior to sales closing for an opportunity to see if there's some way that we can serve your needs when it comes to crop insurance prior to March 15th. And we'll visit about that later in today's meeting as well. But one of those opportunities that are available to you as a potential insured or customer of Farm Credit Services of Mandan is a free APH review, which any of our agents are qualified to do, which basically involves looking at your current policy and seeing where there might be some holes in it or areas where certain endorsements or other angles that we as agents know of that would potentially augment or improve your coverage for an affordable price. So just wanted to put that out there, but most importantly, I want to thank you for your business and I want to thank you for attending today. Next, I do want to just take a brief moment here and take a moment to introduce our staff. And I apologize if this isn't a real large enough screen, but I've got a caption cast right now that lists our insurance agent team. Pardon me. And I want to welcome them onto today's call as well. All of these agents have over 150 years of combined experience in the crop insurance industry, and we are very grateful and fortunate to have them working for us here at Farm Credit Services and working for you as producers. So just to take a brief moment, I want to introduce Yvonne Seidler, a longtime employee of Farm Credit, worked in crop insurance for a long time. Yvonne works out of the Carson branch. And then we've got Jessica Wald and Debbie Zilmer out of the Wishick branch. They're listed there across the top of that flyer that I've posted. Christy Laframboise works out of our Washburn branch. Carla Nelson, Sarah Clement, Penny Hazel, Jamie Fries, Michelle Marole, out of the Mandan branch. I want to welcome you ladies to today's meeting. Appreciate you joining in. And then out of Bowman, we have Sheridan Visser. Out of Beulah, Allison Dubois. And Carrie Sheeler from Dickinson has joined today's meeting. And then down at the bottom, we also got relatively new to the organization, but really excited to have her on staff as well. We've got Julie Miller, who is our insurance agent in Mott, and as well, a newer employee as well in Mott, Ashley Tim. We're excited to have Ashley on board and doing a great job early on in her career too. So, and last but not least, certainly in the lower left-hand corner, Carla Townsend is our insurance coordinator, and Carla will be presenting later on today on some changes that are more pertinent to Southwest North Dakota, some actuarial changes and reminders that we want to get out to you as producers. In addition to the information that Farm Credit Services of Mandan is providing to you today, we do have a couple of guest presenters that we're going to feature in today's meeting. First off, we're going to have Mr. Kurt Freilich with NDSU Extension. He's the Stark Billings County Extension agent. He's going to be spending about 15 to 20 minutes visiting about the ARC and PLC sign-up deadline that is looming here March 15th. So Kurt's got some good information that he's going to share in regards to that piece of business that needs to be acted on before mid-March, and coincides with the sales closing date as well with crop insurance for March 15th. And then the crop insurance specific information, which is the primary reason for us holding this meeting, the content of that portion of the meeting today is going to be covered by Great American Insurance Company. And we're very fortunate to have Troy Ness, who's going to be presenting for Great American. And in addition to Troy Ness, Tori Zimmerman will be presenting as well. And he's, I believe, a claims supervisor with Great American. He's going to be covering certain topics in conjunction with Troy's presentation as well. So welcome, gentlemen, to today's program. All right, lastly, before we kick things off with Kurt, I did want to just mention as well that some of you who are listening in today may have received a packet from us in the mail ahead of today's meeting if you've requested one ahead of time. And in that packet of information, there will be some, I guess, printouts of the slides that Troy and Tori are going to be going through today. And I believe as well Carla's presentation. So if you want to follow along based on the information that you received in that packet, I'd welcome you to do that. In addition, I believe we sent out crop insurance guides to people that requested them. This information is not necessarily going to be covered in the presentation today, but this is a Bible, so to speak, if you want to keep that at your ready reference as you consider changes to your policy and your coverage levels for 2021. A couple of housekeeping things before I forget. We have got this is a live event. There won't be any the question and answer portion of this meeting will be handled by a chat box, and actually it's actually a Q&A. So I guess I want to point out to the participants today that up in the upper right hand corner of your screen, and forgive me because I'm not exactly looking at maybe the same view that you are, but there's a Q&A box up in the upper right hand corner of your screen. That is where if you have questions as we move through today's presentation, that you can type in a question, and I think it gives you the ability to even type it in anonymously if there's something that you're curious about, or if something that one of the presenters has touched on that you would like further clarification on, or a more specific question. We highly encourage you to go ahead and type your question in there on the Q&A. And very lastly, at the conclusion of today's live event or the live meeting here, we're going to forward you a link in that Q&A box for some additional for an additional presentation that was recorded earlier, and there's additional information on some marketing ideas, and also on ARC and PLC, and some insurance topics as well. A gentleman by the name of Steve Johnson, who's he's a retired PhD in the agricultural field, that I've watched it myself, and I think there's quite a bit of value in that, in watching that video. It's about a 30-minute watch, and I think there's some merit into you continuing your evening by watching that. So look for that in the chat box as well, for that link that we will provide you as we move through today's meeting. I forgot to mention one thing, and this is coming from our CEO, Aaron Vetter, and me as well. We would have preferred to have done these meetings in person. We value the relationships that we have with many of you, and we look forward to continuing to serve you in 2021 and beyond. Unfortunately, due to some of the circumstances that we're all too aware of, and because we had to start planning for this thing over a couple months ago, we made the decision a couple months ago to go ahead and do this year's crop insurance meetings in this virtual format. On top of that, some of the insurance companies that we've asked to present at these meetings, now that we've done this will be the second one, some of their corporate affiliates or corporate offices haven't allowed them to go out into audiences yet as well and present. And I'm not necessarily saying that's the case with Great American, but there's certain restrictions that we're dealing with yet, even though the situation has improved greatly just in the last couple weeks. But we would have much rather preferred to do these live, but like I said, we were pretty deep into the planning stages of this, and we were within days of presenting, and we made the decision to go ahead and to trudge forward with this delivery method, at least for 2021. And hopefully we can look forward to getting back together in a group setting the next time we host another meeting such as this. All right. I guess I'm going to go ahead and turn it over to Kurt Freilich then with NDSU Extension. I guess I'm going to give you a little warning here. Kurt, I'm going to bring you on here, and I'm going to turn things over to you to go ahead and start your presentation in regards to ARC and PLC. Welcome, Kurt.
Well, thank you, Eric, and I'm pleased to be here. It's always fun to do these things. I just need to, Eric, give me a thumbs up, make sure my audio is on for you, and hopefully you are seeing a screen of a horse, a mare, and a colt. I did share my screen.
Yes, I finally caught up with you, and I can hear you loud and clear, Kurt, and yep, I can see your video on the right and your desktop on the left, so we should be good to go.
Okay, so folks that are out there, what I want to share with you, we're going to talk about the ARC PLC calculator, and I want to show you where you can go. This calculator is on the ag.ndsu.edu farm management webpage, Farm Bill. It's right here. It's an Excel spreadsheet. If you do download this Excel spreadsheet, and there's various platforms, or I use Google Chrome, there's Firefox, there's other things out there, but when you download it and you get it onto your desktop, let me close, minimize this, and I will bring that up. Okay, hopefully you folks are seeing that now. And once it comes up on you, one of the things that you will need to do. It'll be right in about this area. If you download it, there's going to be a tab that says Enable Editing. For today's purpose, I already enabled it so that I could get in here and do some work on this particular spreadsheet and demonstrate some things to you. So please make sure you enable editing. I've had numerous calls over the years. People call me, hey, I've got the spreadsheet, but I can't make it work. I tell them, open up. You see enable editing. Click on it, then it works. We get through this. What I typically do for growers when I work with them, because ultimately many growers have many FSA farm numbers. And I always like to put at least that farm number in that particular cell so that you know what you're working with. And then you can kind of keep tracks once you make the decision where you're going to go. Real importantly is you need to select the county. If whatever county it was saved on when they uploaded it, that's what's going to show up, but you need to select it. So I just clicked on the county box. There's a little drop down arrow, and you click on the drop down arrow, other counties come up. So make sure you select your county where your FSA, where you're being administered through your FSA office. Okay, so as we get into and the way this calculator works, folks, is anything that's in yellow is a field that you can input in. You can change these fields. If it's whited out or some other fields, I'll show you some other things behind it. You won't be able to adjust those. But from FSA, you will need your base acres and your PLC yield to make this thing work correctly for you. So you will put your base, and you can see on this example, I just put in 100 acres base on wheat, corn, and canola. And then I use the PLC payment yield. This, if it was me, this would be my personal yield. Or if it's a grower coming in, they share that. I put their payment yield in there. Those are the givens. We can't really change those. Where we can do some playing is in this county average yield and our national marketing year average price. Now, where do I get this national marketing year average price? I need to pull something back up and share this with you folks. I just got this yesterday from Dr. Frayne Olson. Hopefully you're seeing it. Projected 2021-2022 national average marketing year price for the various crops. And this was put together by the Food and Agricultural Policy Research Institute, FAPRI, at the University of Missouri. So when you look at, these are the numbers that I'm currently going to use today in those different commodities that we're going to talk about. Now, one thing that I've already had comments from with growers that I've worked with is we've got better prices today than this, and it's spring wheat. Our wheat price is way better. In this figure, this is all classes of wheat. It's spring wheat, it's winter wheat, it's durum wheat, any kind of wheat, it's all classes of wheat that comes into this figure. It's not just spring wheat. So you need to keep that in mind. And I think a lot of you probably know there are different price factors out there for the different classes of wheat. And as they generate this, it is on a weighted average. So this is where I'm coming with using this. I just got this, like I said, yesterday from Dr. Frayne Olson. So I'll put that one down. I'll get the calculator back up. So I did put in those prices for wheat, corn, and canola. I also put in the county average yield for Stark County because I'm dealing off the Stark County for wheat, corn, and canola here. Okay, you may ask, how in the heck can I get this? We got to estimate this Stark County average yield. If we, down at the bottom of this Excel spreadsheet, there's a tab that says program, there's a tab that has benchmark yields, and a tab that has 2015 to 2019 yields. I'm going to click on the 2015, 2019. I'm going to try to get this just a tish bigger so that you folks can see it. Scroll down, pull up Stark County, and I'll highlight it. And right there are the yields that they are using. So when they calculate Ark County, they're using the 15, 16, 17, 18, and 19 yields. And they also do an Olympic average. They throw out the high, they throw out the low. So in this case, they're using 51, 40 and a half, and 30, 34, and that comes up with an average of 41. So that's where these yields are coming into. I'm going to back up, get into the command machine. There we go. It jumped back now to the actual calculator, so you can see where I put in the 41 here. Based off of this information, Eric, I see you on the screen, so I guess you're my audience that I get to talk to today. Unfortunately, I'd love to do this face to face so I can see other folks out in the audience. Right now in Stark County, with that information at a 489, PLC is kind of the lead horse. It doesn't even generate an Ark County payment for us. So what's it going to take to generate an Ark County payment? Where does the yield have to go? I'm gonna plug in 38. Okay, 38 average yield. Do we think that this average is going to drop once they pull in the 2020 data? And 2020 for us in this part of the state was average to above average. So if our average is 41, we're sitting at, once again, we're still sitting, at that mark. Are we going to drop it down? To maximize the ARC payment, we'd have to drop this county average yield from a 41 probably down to a 35. And I bet you we're at maximum county payment, and yes, we are. Down, hopefully you can see my cursor. Maximum county payment now is at 2301, and that's where we're at. PLC is still leading by a neck. Do I think we're going to drop this yield down that low? I don't think so. I don't think so. Maybe a 40 for us. It does bring in $196 off of PLC payment, and you can see the payment rate down just underneath be 230. So in this particular scenario, when I would work with growers, Eric, I would be probably, let them make their own. I have to let them make their own decision. I can't make it for them, but it sure appears that this is something where it's pretty simple to go with. Now we drop down to corn. Right now, using those county average yields and that marketing year average price, somebody may ask, well, why the heck isn't there a PLC payment? Well, the PLC payment is the effective reference price. Hopefully you folks can see where I put my cursor. The effective reference price for corn is $3.70. Wheat is $5.50. That's set by statutory. We cannot change those. Here's these prices that we put in, $4.89 and $3.89. Reference price minus the marketing year average price does not generate a payment. So what that tells me is, it tells me that our cash prices at least have come up and it's above those reference prices. It's a better situation for us. Let's see if this thing will work. The canola. The reference price on canola is 0.2015, 20 cents. The projected price on canola is $15.50. So yes, there is a PLC payment in canola. And if I scroll back up just a tish, and if you look at canola, Stark County, our average yield 2030. There is, in this case, there is some ARC payment coming in, but there's still a $4,000 advantage in this particular case to the PLC. Let's drop this county average yield to 1,900 pounds. It still doesn't increase that ARC payment on canola enough to maybe make that decision. So one of the things that I would strongly recommend to growers as they are doing this on their own, and if they and this is what I do for growers that come to me, is I start out and I put in the averages, I get their payment yields put in there, and then I print a sheet out, Eric, and I mark that original. And then let's say, hey, let's play the game of what happens if we change the wheat marketing year average price to $5.50 or $5.25. It's going to go up. We all want it to go up. Let's say if it goes up, what happens to it? So then I would print that one. I'd probably mark the sheet number 2 and circle that price so that I know what I'm doing, because if I've got 5-6 different FSA farm numbers that I'm dealing with, and at the end of the day, you might have a dozen sheets of paper laying out and you go, which one where did I start and how did I get here? You can always kind of reference back to that. So put it back there. There are a lot of concerns this year, and I hate to say this, right now we are looking not very good production agriculture from the standpoint of moisture, especially out here in Southwest North Dakota. I don't know if there's any calls, any listeners on from other regions of the area, the parts of the state, but out here right now it is dry. It is very dry. And I guess if we are going to have a drought, now's a good time to have the drought. And so growers have asked me, well, we might have a drought. How's this going to affect it? I need to scroll down, Eric, and to show you, oh, where'd it go? Went too far. Come on, it's not responding to me. Okay, there it comes in. Too much. Can you see, Eric? Just give me a shake of the head. NDSU and its entities on the bottom. Okay, good. So if you look right here, double asterisk, benchmark, or the first single asterisk, benchmark yield for 2021 is a 5-year, 2015 to 2019, Olympic average of higher of trend adjusted county yield or 80% of T yield. Those yields are there. I can't adjust them. It's what we've got. It's what we got to deal with. If we have a drought in 21 and we are down in 20-25 bushel yields, and this same program is around in 22-23, that yield will then start to come into play. But with that in mind, and if they leave everything the same and do an Olympic average, if that's the low yield, they're going to throw it out and they'll use averages are the yields that are higher than that. So the main thing, and the last thing I want to show, Eric, and I need to get up here. Oh, come on. The importance of making sure you select the right county. The county. When I was preparing today for getting these things ready for you folks, I did not change my county, and it was on Ward County when I opened it up. With no other changes, just the 2 counties. Look at ARC versus PLC. Now we have kind of a dead heat. Now you start to ask yourself, which way should I go? And my response to growers in that case is, if you've got maybe 2 farms or 3 farms, whatever, and you got similar base acres on that particular commodity, 100 acres on this farm number, 100 acres on that farm number, maybe you hedge your bets and put 1 farm under Ark County and 1 farm under PLC. I don't know how to, it's real close. It's really close, folks. I don't know. That's a tough decision. And, I wouldn't know. You'd have to sleep a few nights on that one to make that decision. So with that, Eric, do you have any questions, or did anybody throw anything in the chat that we should address?
Let me just take an opportunity to look at the chat here.
And while you're doing that,
I probably do have a question, and maybe you covered this already on that FAPRI slide, but this is the marketing year average price, which ends May 31st for wheat. That 489 that you're using, that's how current?
Let me jump back to that. Let me minimize this screen and pull this one up. Okay. So this was done. This is done by that the FAPRI people. They printed it November of 2020, baseline projections.
Okay.
And I had called Dr. Frayne Olson. I think it was the day before we did our first meeting here a couple days ago, and we had a long discussion. And I said, "Is there any way you can get us some updated information on how to use, what to be using in those marketing year average prices?" And he just sent that. I got it probably 2 hours after we got off the call the other day.
Okay.
So
one of the things that I probably wanted to interject is, when you talk about a 12-month average, I mean, if that's current and we're already, into February, it's kind of surprising to me that PLC is still even projecting a payment in some respects because of the recent run-up that we've been experiencing in a lot of the grain markets. But we have to keep in mind that we're still encapsulating June, July, August, September, months in this average calculation before the market started moving here later this fall, early winter.
And you are actually absolutely correct. The other thing to keep in mind is, and this was my discussion with Dr. Olson, was we've got a lot of winter wheat out there. A lot of winter wheat. The situation, winter wheat is heavy down south, and that's probably pulling some of the market down. So when we throw all classes of wheat together, that's, well, us guys up here, if we could just have it spring wheat, we'd be happier than heck. But we have to take everybody into consideration.
Kurt, we did have a question that came into the Q&A that asked about if we can give the website again. I can probably type it in here and publish it on the Q&A,
go ahead and type it in, but I'll pull it back up. Oh, what happened to it here? There it is. It's ag.ndsu.edu/farm management/farm bill. Excuse me. I think another way that if a person wanted to, they could just Google NDSU ARC/PLC calculator.
That's the way I've always accessed it. Yeah.
And it'll probably come right up to that page.
I'll go ahead and post that that website here to the Q&A in a brief moment. I'm on my end of the desk here with producing this meeting tonight. I don't have the luxury of being able to see Kurt's screen and in the same magnitude that the viewers are, and I can't see that address. So I will go get it here momentarily when we get into the next portion of our meeting, and I'll post that address out to the Q&A.
I'm going to try something, Eric. I've never done this with Teams, but
You'll probably be able to do it. Yeah.
Okay. I'm trying to get into that live Q&A.
Mhm.
And let's see here. How do I make an announcement? Let's go.
And then you can Control V or paste it in there. And that address that you copied should, and then you can publish it, Kurt. Yep. Oh, there it is. Yep.
Did it show up for you?
Yeah, that's mine yet.
It showed up on my end.
Yep, it's published now. So for the viewers out there, if you go to the Q&A, and it should have populated with a blue hyperlink for that address. Thank you, Kurt. And if you might need to check, it's under the published queue. So there is a hyperlink out there then that'll take you to that website and those calculators that Kurt referenced in his presentation.
One last thing, Eric, that I would like to say, thank you folks for inviting me to come in. And for those folks that are from other counties, they got questions, contact their local extension agent. I think that they should be able to have them. If you have Stark County producers on, we are going to go through this in more detail this coming Wednesday, the 24th, here at the Stark County at our new office complex, which is just north of the Sanford Clinic, and that starts at 1 o'clock.
All right. Thank you so much, Kurt. We appreciate your time today and really appreciate the information that you've presented today.
Okay, and I have to leave. I've got another meeting to go present to, so.
All right, you'll be warmed up.
Good luck, folks.
All right, thanks a lot, Kurt. All right, so next up, we have Troy Ness and Tori Zimmerman with Great American Insurance. And we'll just take a brief moment here to get Troy's presentation queued up to present.
All right, are you seeing it, Eric?
I'm hearing you. I'm seeing you. Let's go here. Split this, and I can bring your video in as well. So, okay, I think I want to welcome you, Troy. We appreciate you coming on board and for working with us in making this happen today. So welcome, and the floor is yours.
Thank you, Eric. Thanks for having us. Like Eric said, I'm Troy Ness with Great American Insurance. Going to visit a little bit today about some changes for 2021 with crop insurance, some new options that are out there, and some reminders. Tori Zimmerman, our North Dakota Claims Supervisor, is actually on here too, and he's going to go through some claims information when we get to that part of the slideshow. Like they said, if you have questions, go ahead and put it in the chat or the Q&A portion of this. Otherwise, if it's something else, make sure you go in and see one of the specialists, the insurance specialists at one of the locations. So with that, we'll get going. The first slide is our civil rights slide. You'll see this when you go into any agency. It's a requirement that we have this posted, and as such, I am showing it on this presentation also. So I kind of like to get in and show, what did insurance do last year? So this is looking at crop insurance indemnities by county for the 2020 crop year. And this was updated as of February 1st. So it's fairly recent. You can see the darker the red color on these slides, the more indemnities that were paid out in that county. So kind of makes sense if you look at North Dakota, the eastern part of the state. We had a lot of wet conditions, a lot of growers didn't get a lot seeded, and what did get seeded didn't produce very well. So you can see that in this map. If you can see my cursor, you can also kind of see where that windstorm went through Iowa. So it's kind of interesting to take a look at that, where they had that big windstorm that went through. It went right through the central part of Iowa. So that was last year. This is looking at what we have for current conditions as far as moisture. Right now, this map was actually just released and it was updated. So I just updated this and put it in the slideshow, but this is showing the drought conditions throughout the United States that we're looking at currently. So you can see the dark red in the southwest part of the nation, pretty dry, a lot of dry conditions, and some of those oranges are in North Dakota now. So no surprise there. We know that we've been short of moisture here lately, and this map is reflecting that. Getting into some of our dates, March 15th is the big date for us. That's our sales closing date. If you have to make any changes on your policy, maybe you're in a new county or a new farmer needs a policy, we need those changes made by that March 15th date. Any crop level changes, if you're going to make a plan change, we would have to have that done by that March 15th date. For North Dakota producers, if you raise winter wheat and you want to request coverage for that, we need that change or that request in by March 15th also. Production reporting deadline is April 29th. That's the hard date we have to get last year's production certified. Actually, the sooner the better for that though. If you come in to get a crop insurance premium quote done, it's always better to have last year's production reported and entered before you get that quote. It just gives you a more accurate premium quote going forward into the 2021 crop year. July 15th is our acreage reporting deadline. If you have prevent plan acres and seeded acres, they both need to be certified by that date. The end of insurance period dates are listed here, and we're going to talk about that a little later. We have some slides coming up, but that's basically when insurance will end if the crop is still standing in the field. And we're going to talk about what you need to do in that instance in a little bit. Subsidy factors. This is the subsidy factors that we have. These have not changed for quite a few years now. The first line we have is subsidy factors for optional or basic unit structure, if that's what you have on your policy. And the bottom line is the subsidy factors for enterprise units. So just a reminder with enterprise units, what an enterprise unit is that's all your acres of that crop in that county put together into one unit, as opposed to having separate units for each section that you farm in. So because you're taking risk on as a producer by giving up your optional units, RMA or the government does give a higher premium subsidy on those acres, which results in fewer farmer paid dollars. So when we're looking at enterprise units, there are some reminders with that. That is something that needs to be selected by the sales closing date of March 15th. If you happen to be an irrigation producer, your irrigated, non-irrigated can qualify separately for enterprise units. In order to qualify for an enterprise unit, you do have to plant on 2 or more separate sections, and that acreage that is seeded has to constitute at least the lesser of 20 acres or 20% of the insured crop in that enterprise unit. So another benefit besides reduced producer premium for enterprise units, if we're looking at wet conditions where there's prevent plant acres, we can add up all the wet spots that might not have been seeded in an enterprise unit to qualify for the 2020 rule with the prevent plant requirements. So when we are looking at the 2020 rule for qualifying for an enterprise unit, that does only include seeded acres. That does not include prevent plant acres. A couple years ago, RMA made some changes to allow for a multi-county enterprise unit. Before this change was made, if you farmed in 2 counties, but let's just say you seeded only one section in your second county, there was no way for you to qualify for an enterprise unit in that second county because you only seeded on one section. So they made a change. They allow now multi-county enterprise units, and that will work now if you qualify for an enterprise unit in one county, but you don't qualify for an enterprise unit in a second county. Then you can put those two counties together and call that a multi-county enterprise unit. So that's new. That is an option that does have to be selected. So that has to be done by March 15th. You do have to have the same plans of coverage and coverage in both those counties in order to qualify for a multi-county enterprise unit. It's available for small grains, coarse grains, canola, and sunflowers. When we're looking at premium, guarantee, and liability, they are calculated separately, but any claims that are worked on that multi-county enterprise unit are determined at that multi-county enterprise level. So when we look also at enterprise units, there is besides that higher premium subsidy level, there's also a discount based on the number of acres that you have seeded. So I think that maxes out at like 846 acres. The more acres you seed up to that point, then there's a bigger discount also based on that number of acres that you have seeded. And for a multi-county enterprise unit, we're looking at all those acres between those two different counties. This chart has a lot of information on it. It's looking at CRP acreage that might be seeded on, new breaking, or native sod. Just one thing I'll tell you as producers, if you're going to be planting on CRP ground, new breaking, native sod, or added land, make sure you get in and see your agent before the sales closing date. You need to look at how to insure these acres, what coverage would be available on them, what requirements you may have going forward with those acres after you do seed on them. There's just lots of things to keep in mind with this type of acreage the first time you're seeding on it. So again, come in and see your agent before the sales closing date so you can run through all this information and get this straight on what's going to happen with those acres. Whole farm revenue protection has been around for quite a few years now. What this was designed as was coverage for all the commodities on that farm under one policy. That would include both crop and livestock. It's based on past revenue that you had on that farm, and where that information comes from is tax records. So when we're looking at the 2021 crop year, you're going to have to supply tax records for 2015 through 2019 in order to determine what this coverage would be under this policy. So 5 years of tax forms are required. There is quite a bit of other paperwork that is needed for this policy. So if it's something you're interested in, it's always best to get in and see your agent sooner rather than later, just to get through all that information and make sure you get a quote done and figure out everything you need to know about what the whole farm revenue policy is going to do for you. And we're getting into claims. I'm going to stop sharing. And Tori Zimmerman, our claim supervisor for the state of North Dakota, will run through claims.
Thanks, Troy. I'll just take a moment here to get Tori queued up.
Can you guys hear me?
Yes.
I can hear you loud and clear, Tori.
Is the presentation up yet?
It
is.
is. Still see
All
Troy.
right.
I'm going to get Tori presenting here real quick. Right. Bear with me one moment, Tori. Okay, you should be set to go, Tori. Thank you for joining us today.
All right, thank you. As Troy said, I'm the claims supervisor for the state of North Dakota. These next slides I'm going to go through have a lot to do with just changes, maybe from a claims side, and then some reminders. So on the first one here, getting into the replanting reminders, this was a change a couple of years ago. Replanting is required by RMA to take place 10 days after the final plant date, as long as land is fit to be planted. So once the end of that final plant date hits, so I'm just going to use May 15th as an example. If that was your final plant date, you'd be required to replant up and through 10 days following that. So up and through May 25th. So also going to be considered practical to replant regardless of the availability of seeds or input costs necessary to produce the insured crop. To receive a replant payment, an adjuster must give approval to replant prior to the insured replanting. If you get into a replant situation, the best thing to do is get a hold of your agent as soon as possible so they can get in contact with us, get the loss turned in. That way you're not sitting there with a tractor and a planter waiting to get in and get something replanted. With self-cert replants, if it's less than 100 acres per unit, we can go the self-cert route. You just have to get pre-authorization again from whether it be from the office or from Great American office, the adjuster or supervisor, and the acreage must qualify for a replanting payment. Getting into the prevent plant. Qualifying for a prevent plant payment must be due to an insured cause of loss that is general to the area. You must have been prevented from planting at least 20 acres or 20% of a unit. The PP acres must be reported on the acreage report by the farm, track, and field number. And PP claims must be filed no later than 72 hours after deciding not to plant or the final late planting date. Qualifying for a prevent plant payment, if you are prevented from planting the insured crop by an insured cause of loss, carryover coverage if you had a policy last year, if the cause of loss was after March 15th of 2020, you could qualify for the prevent plant payment. If you're a new insured this year, your cause of loss must not have occurred prior to March 15th. So your cause of loss would have to have occurred after March 15th to be eligible for a payment this year. Coverage is not available if the cause of loss has occurred that could prevent planting at the time the ground is added to an operation. So if you've got added land to your operation, if there is a current cause of loss on that, it would not be covered. Coverage is also not available on ground where pasture or forage is in place and on any ground used for conservation purposes. Under the physically available for planting, there is a minor change this year. Acreage to be considered physically available for planting is referenced in the basic provisions. The special provision states that the acreage must be free of trees, rocky outcroppings, can't be enrolled in CRP, can't be in a perennial crop, cannot have pasture, rangeland, or forage in place. And the key thing, in at least one of the 4 most recent crop years immediately preceding the current insured crop year, it has to have been planted, harvested, and insured. The change they've made is if it is unharvested and it's adjusted or appraised for claims purposes due to an insured cause of loss of drought, flood, or excess moisture, we could not include that year as being qualifying for the planted, harvested, and insured. Not that we should have that many issues out west in your area with the fact that we really haven't had a lot of PP, but it is something to keep in mind as we move forward. The 2 crop history, the old rule, if a field has both planted and prevented crop, the PP acres would be considered the crop type and practice as the acres that were planted in the field, unless the field qualified for the 2-crop history. So the PP acres in that field would have to be at least 20 acres or 20% of the insurable acreage in the field. And the insured would have had to have produced both crop types, or practices in the same field within one of the 4 most recent crop years. The change is that acreage that was prevented from being planted, if it constitutes at least 20 acres or 20% of the total insurable acreage in the field, and the insured can provide proof that the insured intended to plant another crop or crop type on the acreage, he would be able to call it something other than what's in the field. We would have to have either seed receipts or fertilizer receipts, or if he has a documented crop rotation that could prove that he would have intended to plant a different crop in that field. The RMA is expecting the insureds to provide documentation for those inputs, the seed, the rotation, etc., to prove the intent of the claimed PP crop. If they can't, they can still use the 2-crop history if they have it. But right here, we don't have to try and go out and get 5 acres of corn planted to be able to call the PP corn out there. You just have to be able to prove that you wanted to plant corn in this field, and it has to be 20 acres or 20%, and have the proof with the inputs. Another change with the prevent plant is if you're a new producer to a county or a new producer and you filled out an intended acreage report and your intent was to plant 100 acres of soybeans and 100 acres of corn, you were unable to get any corn in, so you planted all the acres to soybeans in 2021. In 2022, if all your acres were prevented from planting, you would really only have 200 acres of soybean eligibility. But this has been revised to allow the use of an intended acreage report for a second crop year. So you would file a secondary intended acreage report for 2022. And that eligibility would be based on that intended acreage report for 2022. If no intended acreage report is filed in 2022, the insured would only have the 200 acres of soybean eligibility. Another change, revised to not reduce the eligible prevented plant acres by an uninsured second crop if an uninsured second crop is planted on the same acres within the same crop year, following a failed first insured crop. So if we had wheat that failed and you intended to go in and plant soybeans but uninsure those soybeans, that soybean eligibility, it would not reduce your PP soybean eligibility. Here's the timeline for PP, kind of letting you know if you, once you get past the final plant dates, if you elect not to plant, if you do decide to plant or plant a cover crop, and then the dates as far as hay, grazing, and silage. So if you're doing it before November 1st, we get the reduced PP payments. If you're doing it after November 1st, for hay, graze, or silage, you would still get your 100% PP payment. If it's harvested, you would get the 35% PP payment. In the last couple of years, there's been some adjustments made on the date. You know, that November 1st date, they've moved it earlier, but it is back to the November 1st date. Coverage factors, are listed here. No changes here on the coverage factors. Getting into some other reminders, bin measurements and strip requirements. If you're going to commingle prior year's production with current year's production, you definitely want to request an inspection to get that measured prior to that commingling. If you do a lot of feeding, you're going to want to get that production measured as well. As far as strip requirements, we can authorize you to leave strips in the event that we can't get there before you take the crop to another use, or if more time is needed to determine the amount of loss. Signing claim documents, only the policyholder, a power of attorney, an authorized rep, or a limit authorized rep may sign the claim documents. So spouses may not sign unless they're listed on the policy as a POA or an authorized rep or a limited authorized rep. If you have a POA on a policy, we must have up-to-date POA form on file in order for them to sign the claim paperwork. And for authorized reps listed on a policy, claim documents should be signed as the authorized rep is listed on the policy. Signature and printed names are preferred. Notice of loss guidelines. Notice by unit is required not later than 15 days after the end of insurance period, which would be that final date of harvest in most cases. From day 16 to day 60, it's considered a delayed claim. For revenue losses only, notice needs to be is required not later than 45 days after the latest date the harvest price is released. Once we get to 61 days after that end of insurance period, the notice of loss will be denied as per the basic provisions. 61 days after that end of insurance period, failure of the insured to supply proper documentation may result in a denial of a claim. Final inspections, when we get to the end of insurance period, and that's the calendar date end of insurance period, and we reach that and we still have standing crop in the field, an inspection is required as soon as possible unless the AIPs are allowing additional time for harvest. The insured is expected to harvest the crop if a window of harvest arises. If you had a window and you fail to harvest, that acreage is appraised and the claims are finalized based on that appraisal. So if the insured has standing crop at the end of the calendar date of insurance, we recommend submitting a notice of loss so we can make contact with the insured and determine the intent and whether or not we need to do appraisals, or if we need to grant an extension to harvest. Here is the end of insurance period calendar dates listed here. If you're going to put crops to an alternative use, make sure you contact your agent. The adjusters need to give you approval. These can, if prior approval is not authorized, it can affect the potential claim payment. If it's cut or silaged, before appraisal is done or before strip authorization is given, it would be deemed destroyed without consent and ineligible for a claim payment. As far as record keeping, hard records, which are considered your verification records or third party, would be your assembly sheets, your tickets, any bin measurements, any appraisals done by an adjuster. Your soft records are considered your support system for your hard copy records. They're not acceptable for APH audits. These examples will be the truckloads, the hopper records, and combine monitor records. And again, these are for a support system to your hard records. Harvested production records, truckload records must be kept as you harvest. Insureds must have those records available for the adjusters at the time the claim is worked. If you have split tickets, you need to keep your hopper or weight records to adequately split those tickets. Any FSA or insurance provider measurements are required when you add new grain to old grain in a storage facility. They're again touching on the commingling. If you commingle that grain, the old grain or the prior year's grain will be counted as new grain from a claim standpoint. Measure or third-party verification on any production used for seed. If you're looking at using some for seed, make sure you're getting the measurement. Some of the information required on tickets through your truckload records is listed here. With the commingling production, the Appendix 4 APH audits, the APA is not allowed to accept commingled production records unless the insured reported production as commingled on their production report and yield report, and the insured has to maintain those soft records that will allow the AIP to allocate production back to the applicable database. So there's your support records. If the insured certifies production on the production report at a level below the basic unit, they must have the acceptable records at the level reported, or assigned yields will apply. If an insured over-reports their production on their production and yield report by more than 5%, assigned yields may apply at the unit level. If assigned yields are given, the insured can recertify their production for the following year if they have the acceptable records. Here's a big change that could affect, especially if we're looking at high VOM type situations, which we've had in the past on wheat. For production that has aflatoxin levels in excess of 300, VOM levels in excess of 10 parts per million, or fumosinin levels in excess of 100, or any other substance or condition that exceeds the maximum amount allowed, a claim will be held open until that production is sold, fed, used, or destroyed, but not more than 365 days after the calendar date for end of insurance. So any production that remains unsold or has not been used or destroyed more than 365 days after the calendar date, we will not adjust for any quality deficiencies listed in Section C of the special provisions. Another change, obtaining samples, the timeline for obtaining samples for quality adjustment. Unless the AIP grants extensions to harvest, the samples of production used to determine insurable quality deficiencies under sections A, B, and C must be obtained in accordance with this quality adjustment statement, but not later than 60 days after the calendar date for the end of insurance period. This applies to grain, sorghum, corn, and soybeans has been added. So that end of insurance period date for those three crops is December 10th. That's the calendar date. Those quality adjustments or samples would have to be pulled within 60 days after that. It does not apply to the crops on the bottom. Real quick, just touch on our electronic funds transfer, the direct deposit. This is something you can sign up for within our Great Ag system. You can click on the grower tab, fill it out, and just click submit. There's no physical signature needed. If there is an assignment of indemnity, you would have to print it out and have your financial institution sign it, as well as you sign it. And that is the end of the claims.
Thank you, Troy, or pardon me, thank you, Tori. And getting the letters switched around there. Appreciate your information today and for coming on to give us some insights on claims. So appreciate your time. Thank you.
Thanks.
We're going to bring Troy back on now to finish Great American segment of today's training. So Troy, I got your desktop here. Just one brief moment. All right, Troy, you are back on.
All right. Well, we'll finish up with some actuarial changes that we have in the state. If we look at this map, it's showing kind of the progression of non-irrigated corn grain coverage going west the past few years. So in 2021, we did have RMA make some changes. They've added Billings County and Williams County now to be eligible for non-irrigated corn grain coverage. So in those two counties, if you're a corn producer and you may have had to do written agreements in the past to get coverage, you will not have to in those two counties going forward. Soybean expansion, or buckwheat actually, if we're looking at buckwheat here, they've added Mercer, Oliver, Morton, and Golden Valley counties in North Dakota for buckwheat. Soybeans is here. They've added McKinsey County in North Dakota for soybean coverage, and they actually have the first county in Montana with soybeans available also. So a change that we have kind of continuing, this has been going on for a little while in the state. RMA has been making changes to the continuous cropping and summer fallow practices for wheat and where that's available. For 2021, Oliver, Morton, Grant, Sioux, Adams, Slope, and Golden Valley counties in the southwest part of the state have changed from continuous cropping summer fallow practice to just irrigated, non-irrigated, and this is for wheat. So instead of insuring your wheat as CC or SF, it's now going to be insured either as irrigated, non-irrigated. And we'll talk in a couple of slides on what happens to your APHs. If we look at barley, they're doing some changes also on continuous cropping summer fallow with barley. McLean County, Morton, Grant, Sioux, Hettinger, Adams, Golden Valley, Billings, Dunn in the southwest part of the state have changed barley from irrigated to irrigated, non-irrigated from continuous cropping summer fallow. So what's going to happen with your APHs for both barley and wheat in these counties, they would be combined together. So if you had summer fallow history and continuous cropping history, that history is going to be merged together, and then you'll end up with one database in most cases if you're a non-irrigated producer.
Troy, if I could ask a question.
Sure.
And this may be overstating the obvious, but there's probably some summer fallow yields out there from 20 years ago. Those would obviously fall off of the database then if there's 10 years of CC or continuous cropping history that would precede that more recently. Is that correct?
That is right. It's only going to take the 10 most recent crop years of history. And a lot of cases, you're exactly right. What we're seeing is that summer fallow history is from 15 years ago. And if you add that in with your recent CC history, the CC history is going to stay, and you'll more than likely lose that SF unless you're still an SF producer, you know, where you have a rotation with summer fallow.
Okay.
Then if you were, then your CC and SF yields for that, if you had them in the same crop year, would be added together, and then that new average would be used in your APH.
Thank you.
So quality loss option. Now this is something I want to specify. This is on crop insurance. Right now, FSA does have a quality loss program available also. I believe that has a March 5th sign up date. But on the insurance side, new for this year is a quality loss option that we have that affects just the insurance side. So what this does, it allows producers to replace in their APH database, if they had a claim opened and they had quality losses on their production, the pre-quality amounts can actually be used in your APH database. So again, like I said, you have to have a loss open for that year that you want to take that pre-quality production and put in instead of the post-quality. It's on buy-up policies only, so it's not available on CAT, and it is an option. So it does have to be selected by the sales closing date. And you can select it on a crop county basis. So it's not your whole policy. You can pick and choose which county crop you want to select this on. So if you do select it by the sales closing date, you can go and individually evaluate each unit that you have on that county crop and see maybe there's a database that you don't want it to apply to. You can make that decision then up until the production reporting date. So with this, I'm pretty sure all the approved insurance providers, the companies have quoting software. I know we do, that can actually run through this. It'll tell you what your yields are before this option and after. It'll show you what the premium is with and without this quality loss option. The best thing to do is just look at that. Take a look at how this would affect your policy if you happen to have some quality losses, and see what your gain is on the yield versus the increase in premium that you would have. So this is new for the insurance side for this year.
Troy, I just want to expand on that if I could.
Sure.
And maybe just because it's been so recently here, as recently as 2019. So if I could just play out a scenario for you. If we had an insured that had a 50 bushel wheat crop standing when the rain started in September and October of 2019, and they had significant falling number issues as a result of that, and they still harvested that grain, but due to those factors that were applied in the adjustment, they were subject to, let's say, a 50% reduction in their yield or in their database as a result of those falling number or sprout issues. You're saying this QLO option would be able to return their yield to a 50 in that case, pre-adjustment?
That's exactly the way it works, yes. So it looks at what that production was before any quality factors were factored in to reduce that production down. And that would be whether or not there was a loss paid or not, but there does have to be a loss, notice a loss that was submitted on the crop. So it doesn't necessarily mean you had to be paid a loss. Okay. So we're seeing a lot of interest in this because of, like you said, the 2019 crop year. Just looking at that, and as you go farther north, we've had quality issues along the northern tier for quite a few years, where they're taking a look just to see, what that pre-quality was, how it's going to fit in. I know our company, we've actually ran a query and went back and gathered pre-quality loss information from those loss claims and put them in the APH, so you can actually run an evaluation to see what's happening. I would assume other companies are doing the same thing. So like I said, the best thing to use to evaluate this is getting in and looking at the quote and seeing what your yields are going to be and what your premium is going to be. So the crops that are available for this are listed on the left side of your screen. So the barley, buckwheat, canola, corn, cotton, not so much in our area, flax, barley, malt barley, oats, safflower, soybeans, wheat, sunflowers, and then the eligible quality statements are on the right. So that's what it's available for. It's something to take a look at, just see how it works. Malt barley, there was a few changes on the malt barley endorsement for 2021. Quality adjustment is now determined using local market price, and that's the local market that producer goes to. What's going to happen, the adjuster will go to that market and it determine what that price was on the date that barley was rejected by the buyer, as long as that price is reasonable. So if that price doesn't seem to be reasonable, then that adjuster can go around and gather other local market prices for that barley and use a representative price then for that rejected barley. Quality adjustment will now impact on that, and the premium billing date also changed now for malt barley to 8/15. So, and this is just kind of recapping what I stated. You know, if there's an unreasonable price or something that looks a little funny with that local market price, then those adjusters have some options where they can go out and gather more information to get a more representative price for that rejected barley. ARC PLC, you know, we went through that earlier today, so I'm not going to spend a lot of time going through that. Just know that that decision needs to be made also coming up here. SCO, supplemental coverage option. This is an additional option that's been around for quite a few years now. This is something that you can add on to your underlying multi-peril crop insurance policy that you have in force now. It's on a county level, so you can select it on a county crop basis. You have to have PLC at FSA in order to take the SCO, the supplemental coverage option, and it does follow your underlying multi-peril policy. So what this coverage option does, it's based on your coverage level that you have in place on your policy. So if you had a 75% policy in place, coverage under this goes up to 86%. So it'd go from 86% down to your 75% coverage level. It would insure that band or that amount of coverage. If you had a 70% policy, it's going to insure from 86% down to 70. So it always starts at 86% and it goes down to what your underlying multi-peril policy is that you have in place. So for this supplemental coverage option, your guarantees are set on your underlying policy yields that you have on your policy, but claims are determined on a county basis. So this is a area plan based on county yields. So with that, we will not know what the county yields are until June the following year. So on SCO, if you have SCO in place and you have an underlying multi-peril policy, if you had a loss, that would get worked in the fall, your underlying policy, and you're not going to know until the following June if you had a payment due on SCO or not. And that payment is not going to be based on what you have for yields on your farm. It's going to be based on how well the county did as a whole for that crop last year. So the full amount on this supplemental coverage option would pay out once that loss amount gets down to your underlying multi-peril coverage level. So it pays from 86 down to what you have on your coverage level. They also have a coverage percentage that you can select, and what that would do is that would affect your premium and then also your loss payment. So if you selected a 50% coverage percentage, your premium will be cut in half, but any losses that you have would also be paid half. So here's an example, kind of shows exactly what I talked about. We're looking at 86%, that's where the SCO coverage starts. It looks at what your underlying multi-peril coverage level is. In this case, it's 75. So what we're insuring is at 11%. So difference between 86 and 75. If we look at this example, we have 170 bushel corn yield, 450 price. You multiply that out, we have an expected crop value of $765 times that 11% that we're insuring, times the 100% coverage factor. We're going to have $84.50 of SCO protection in this example. So in order for a loss to be triggered, the county yield that is reported to to us next June would have to fall below 86% of the expected county yield for a payment to start. And then in this example, if that county yield was actually below 75%, we would max that payment out. So this has been around for a few years. This is not new. What is new is the enhanced coverage option. So this came out this year. This again is an area-based plan. Your guarantees and liabilities are set by your underlying policy that you have in place, but this coverage is based on, as far as when the coverage pays out, is based on how well the county does again next June. So with this goes on top of SCO. So SCO went up to 86%. ECO will start at 86%, and there's two options. It'll either go up to 90% or 95%. So that's producer choice. You can pick which coverage band that you want to have insured, either 86 to 95 or 86 to 90. It does use the expected yields that RMA has published and will publish to determine if there's a loss payment. Same as SCO, it does use the projected and harvest prices, the same as your underlying policy that you have in place. That protection factor is still there, so you can reduce your premium and indemnity with impacting, how the loss would be paid on this. Available for 31 crops this spring. And one thing that is different between SCO and ECO, with ECO, you can have either ARC or PLC at FSA. So there's no requirement to have one or the other. You can buy ARC with SCO, or you can buy it without. There's no requirement to have one or both of those in place. So you do have to buy this by March 15th, this endorsement or this option, and then the premium is due then on September 30th. So kind of just gives you, in this example, there's an 80% policy in place. SCO would cover 86 to 80, and they're buying the 95% ECO. ECO would cover 86 to 95. So with ECO and SCO, you do have the ability to get up to 95% coverage, be it an area-based plan. You can have that type of coverage in place on your policy if you wish. Last slide I have is pricing. This is as of yesterday. I didn't change this for today's trading, so I'm not sure what the markets did today. But I did update this with yesterday's trading, and I also have the 2020 crop year prices that we had in place listed. So if we're looking at all these prices, we can see that they are going up. We've had a nice market rally here for the past few weeks. You have higher prices for these commodities this year. That means you'll have more coverage in place on your policy this year. And that more coverage that you have on your policy will also mean you'll have that much more premium also. So that coverage increase percentage will be the same as your premium increase percentage. So $4.53 for corn, $11.70 for soybeans where they're insurable. Spring wheat, we're at $6.47, durum $6.72. Winter wheat in the winter wheat states of Montana and South Dakota is $4.98. Barley, we're looking at $4.14. Canola is 20.1 cent. The oils are 21.5 and the confectionaries are 26.7. I did do some looking. Corn silage is currently, and that's corn silage is set. That's $31.75 a ton. Flax, $10 a bushel, and oats is at $2.45 a bushel. So these prices here are the revenue prices that we're tracking through the month of February. So they've been changing a penny or two each time I update it. So we won't know the actual prices until probably the 2nd of March, first 2nd of March, something like that. But they haven't been changing much. So we're close on these prices, and we got a couple weeks left on tracking these, or a week and a half, whatever that is. With that, Eric, were there any Q&A questions while we went through this?
I'm not seeing any right now, Troy, but let me just double check it here. Give it a moment. Carla, if you want to go ahead and queue yours up and share your screen, that would be good. And I can get you queued up and ready to go here. Troy, I want to thank you for coming on today. It doesn't look like we have any questions from the attendees. So once again, thank you for agreeing to come on and participate in today's meeting in this format. Appreciate it.
Well, thanks for the invitation.
Thank you, Troy. All right, Carla, you are up next. If you wouldn't mind turning on your camera. I can find you here. There we go.
Okay, I'm on my way, sorry.
All right, last up on the agenda for today is going to be Carla Townsend, our insurance coordinator out of the Mandan office. She's going to be doing a short presentation on some reminders and some things that are very applicable to the insureds in our area. So I think we should be ready here momentarily, Carla. I think we're set to go. Welcome.
Okay, you see my screen?
You're good to go, Carla.
Perfect. Okay, thanks, Eric. Okay, I'm going to mention, just make mention of the risk management products that Farm Credit Service has available and offers to our producers. And just a quick note of those, it's the multi-peril, crop hail, the forage production, there's the pasture rangeland forage, annual forage insurance, livestock risk protection, dairy revenue protection, term life insurance, and disability insurance. So any questions on any of those, just go ahead and contact your agent for details. And there's also some sales closing deadlines for all of these here. So just be in touch with your agent. We do have some brochures available for you to read if you need a quick read on that, so we can send that out to you. Our approved insurance carriers that we have with Farm Credit Services is Great American. And again, thanks Troy and Tori for presenting today. We also work with Rain and Hail, our Rural Community Insurance, referred to as RCIS and NAU. And just going to wrap up the meeting today with some reminders. Some of it's going to cross over on what Tori and Troy mentioned, but I probably have just a few more points to make mention of some of these areas. So it's going to be sales closing, some planting, acreage reporting, production reporting, some claim reminders, and then lastly, that review of the 2021 LRP changes. And I'm just going to make a few comments here that, like I said, Troy mentioned a few of these items, and I'm just going to go into maybe a few more details. Sales closing is very important time, March 15th, for you to stop in the office and visit with your agent. And our policy reviews are important. They're necessary to ensure that you have an adequate coverage in case of a loss. And we want to make sure that you have the coverage and protect your investments and profits. So we recommend that you schedule appointments with your insurance rep. And if you probably will mention or comment that you don't think you have any changes, I recommend and we suggest that you make at least 15 minutes with your agent just to kind of go over some of the items that we just talked about. Our insurance reps have a checklist that they go through just to make sure that to address all the what ifs. And one of the things is just to make sure all those crops, this kind of gets forgotten sometimes, is list all those crops on that you think you're going to plant. And planting intentions can change with the wet or dry conditions. And after you start planting, of course, in the spring, it's a little late to add any crops. So just do those at sales closing. If you add a crop and you do not plant, that's, of course, we'll just put 0 acres and no premium. So there's no we'd rather have more crops listed than not having a crop on there that you decide to plant in June or end of May. Also, maybe just like Troy had just mentioned, or Tori mentioned, that adding a spouse as that authorized rep, that this is a time that you could also do that. And if you do add a crop, and if that crop type or practice is not insured in a county, then a written agreement would be needed, and this is the time at sales closing to do that also. And then also, if there's any change in your marital status or an address, or if you're changing from a corporation or just an individual policy, these are all the things you can do before March 15th. Added land, if that's known, if we could identify that at sales closing, that would be perfect. And that gives us time to review and apply options before March 15th to those added land acres. And also to be aware and talk about if you add any crops to that policy, there's rotation requirements that need to be met before you're planting. Increase your APH. There's like a half dozen of yield options that you can put on your policy to increase your APH. That's a time to add that. Troy had just mentioned the quality option. That's something that we could definitely look at. And then your coverage levels. Prices have been going up this year compared to last year. So of course your premium will be up. So just kind of do a quick glance of what your premium will be and your coverage levels. Troy mentioned fall planted crops. We need to be aware of that. And also any native sod, new breaking, or CRP acres. If you're going to do malt barley, we have to make note of that on your sales closing. And then review any SCO or ECO options, and we can do quotes for you for those products also. Sales closing reminders. Again, the FSA has a few programs that they have: the quality loss adjustment, the whip up, and the top up programs. And these programs require crop insurance or NAP coverage for the next 2 available crop years. So that would be a crop that you're going to have the program pay you on. March 15th would be the sign up date for those crops. And the FSA programs require crop insurance documentation if our producers are involved in those or take part in those. And just to let you know that our insurance reps can assist getting those documents, whatever documents you need, if we have them here, whether it's in the claims or in APH information, we can assist getting that documentation to you. Just a reminder, though, that our reps are not experts in those FSA programs, but we are, like I said, available to help you with gathering the information. Planting reminders, just call your agent if you have any dates, questions on any of these dates as you start planting. The earliest plant date is, you need to be aware, pay attention to that in case there's a replant payment needed. And then the final plant dates and the late plant dates and the prevent plant dates, those dates, the liability will decrease as anytime after the final plant date. And so just if you need any information on that, visit with your agent. And the prevent plant, to talk about that as you're planting, discuss the liability of the prevent plant, any eligible acres that you have for a particular crop. There's also rolling acres, and I think there's even a term called borrowed acres. So just visit with your agent on that. And again, as you're planting, just reference the rotation requirements. You just recently received their crop insurance reference guide, and the last page, I think, of that, or the middle part of that newsletter, actually has a pretty good section and pretty detailed section with clear information about the rotation requirements on each of our crops that have those rotation requirements. So, and then as you're planting, if you have your maps, go ahead and document the dates on those maps when you planted those crops, and if there was make note if it was a late plant, and also if there was prevent plant, and then the crop that you put, if you put that you did prevent plant on there, just put PP and the crop that you intended to plant. Now I'm going to move over into the acreage report reminders. As we're doing the acreage reports, our insurance reps are preferring and like to work with the producer print and the maps. That's their ideal way of verifying and making sure the information at Farm Credit, the insurance part of it, and the FSA information will match. And then just a reminder that if you go to the FSA office after, or you think of something that needs to be changed, you realize there's a mistake somewhere, and you go to the FSA office to make those changes, the agent needs a revised producer print and the maps. So just make sure that you give a copy, circle back to the agent to give us a revised copy. And then also with acreage reporting, if you did have that added land, identify that on the acreage report. And verify, double check your unit structure, and list all acres that are planted, insurable and uninsurable acres. And those acres would be like acres, oats for hay, or any of those crops that did not meet the rotation. And also document timely, as you're doing your acreage report, document timely again, that what was planted timely, late planted, and any PP acres. And the percent share sometimes can get forgotten, because sometimes that always is maybe 50-50. And then maybe the next year, in this year, say it's 2021, it went 75-25, just to make sure that that is changed from the previous year. Okay, over to production reporting reminders. Report your yields to report those yields as soon as possible. Troy had mentioned that. And those, if you do that, the quotes that you do during sales closing will be more accurate if you have your 2020 yield updated. And report the same yields to FSA. FSA has some programs that are requesting yields, and that can trigger an audit if the yields are different from FSA compared to crop insurance. So just make note of that. And as you're reporting your production, account for all the insured and uninsured acres in production. Verify the data, that it's bushels, pounds, or tons, And it's important to get the production reported. Failure to report the production, you will receive 75% of the prior APH. That production is not reported by April 29th, and you will also lose your optional unit structure. And last note with the production reporting is to specify on the production report that you give to your insurance rep, specify that crop was stored, sold, etc. So make sure you do that. Record keeping, if they're in an audit situation, they're looking for truckload records by section. That will support your unit structure, and bend measurements will verify your bushels. And just a reminder that the insureds need to the record retention is 3 years plus the current year. So just keep mind of that as you are filing your documents, that probably try not to throw as much as you'd want to. I know sometimes you want to clean up and get rid of some of that stuff, but we do need 3 years if there was an audit. And as you are doing your documenting of your APHs or your production as you're harvesting, we do, I'm sure you're familiar with, that we have our record keeping books that we hand out. And if you ever need any more of those, just contact your agent. We can give you more of those. Call your agent, request an adjuster. Appraisals are required on any acres that are prior to haying. So any oats or barley that are insured as grain and you decide to hay, we need to have an appraisal on that. So anytime you put a crop to another use, that's the situation where you need appraisal. Silage acres prior to cutting would need an appraisal. And then you request a measurement if there's grain prior to feeding. And then when putting new grain on top of old grain, we need a bend measurement or a feed or pile measurement. And those appraisals then will eliminate need for feeding records if there's an audit. So that would definitely make your life easier if and when there's an audit, that you have all of this information. That information will stay in your file, And we could just grab that and submit that when there's an audit. Prevent plant acres. We need to know, let us know as soon as you are, when you're planting and you decide that you are no longer planting and you're going to call it prevent plant, let us know. Let your agent know, and then we submit that. Our adjusters like to get out there as soon as possible on those claims. Anytime you have an equality issue, our adjusters need to pull samples, so let us know about that. And if you replant a crop, notify us as soon as possible on that, that's happening. And when you submit a loss, sometimes when there's a county can be forgotten. If you have two counties and you submit a claim or a claim appraisal or late harvest, just to indicate that there's two counties and you would like both of those claims submitted. And report losses timely. There's end of insurance dates, and they vary by crop. And a claim can be or will be denied or declined if it's not filed timely. So if you would be giving production right now to your agent and realize that there was your short production, at this point, a claim would not be able to be worked because the end of the insurance period on most of those crops were last fall. And when you have a claim and your premium is still due, the premiums are due regardless of that there's an outstanding claim, and late fees will apply if it's paid after the due date. Okay. Are you still seeing me on here? Just want to make sure I didn't. You see, am I still on here, Eric?
Yeah, you're coming through just fine, Carla.
Perfect. Okay. I clicked on my mouse and I just was making sure I didn't end the meeting or something. Okay. Sorry about that. Okay. Crop insurance information. Eric had mentioned that you have a crop insurance reference guide. We've given, not the reference guide, crop insurance. Shoot, I forget the name of it. We changed the name here. Crop insurance guide. Okay. So it's like about 30 pages of crop insurance information, from prevent plant to late plant to TEALs. So we gave this out last year to our insureds, and we're going to give out a new one this year for 2021 with the changes. And then you also received in the mail, just recently, the crop insurance reference guide. So just these are information that you can reference if you have questions on any of the products that we have, or any of the options and requirements that with crop insurance. So if you have questions, go ahead and reference that. And if you have more questions, visit with your agent. And it's important to open up your mail and emails to view and review your documents for accuracy. And anytime you notice that something is not correct, give the agent a call as soon as possible to make that correction. If corrections are noticed at a time of loss, it's difficult to make changes at that time. So just anytime that you give information to your insurance rep, that information will be keyed and updated, and a new document is sent to you. Usually you'll get it in the mail within a couple of weeks or whatever. So just make sure you look at that. I know it gets busy at haying time and harvesting, so sometimes you don't realize that information is coming your way, but just make some time to look at those documents. And communication is one of the things that we like for our agents. Want to make sure that they keep the communications line open, and by doing that, that allows us to better serve you. And if there's a preference on how you would like your information sent to you, if you want it via a phone call or a text message or sent in the mail, or we do send something to you in the mail, and if you'd like a text message that says, hey, your acreage report, your scheduled insurance is on its way, or an updated APH is on its way, we can let you know that. Just visit with your agent and she can kind of work around that so that you're aware of what documents are coming. And if any questions about anything that you're doing, just visit with your agent. If or in doubt, anytime you have a question and if you're not really sure, I guess there's never a silly question. So visit with her, and like Eric said, We have a group that has 150 years of experience. So if that agent doesn't know the answer, she will visit with one of the agents in the association, we're a team, and we can work together and get back to you on an answer. And Eric also mentioned, I'm just going to put a note on that, that we have offering, Farm Credit Services is offering a free APH review. So if you are looking at your review, your APH and wondering if you have all of the options on there, that some of that we just talked about today, if you let us know and we can go ahead and look at that to make sure that you have your APH has the maximum options on there. I will go past this here because this is what Troy talked about and the prices, so I'll just sneak by that. And then lastly, I'm going to review the 2021 LRP changes. And the changes that happened for 2021 crop year, they increased the premium subsidy that varied on the coverage level selected. So I have a note here that the previous, it depends on the coverage level. So on this side here, it's 95 to 100. These are all the levels of coverage, and these are the subsidy rates, percentages that were prior to 2021, and these are the revised 2021 on the right-hand side. So it basically went up from about 10% for all of them, except for from 80 to 85 and on up. It went from 15, basically 15 to 20 points. Okay. And there was also they added a new feeder cattle and swine types to allow for the unborn cattle and swine to be insured before their birth. So they could, as if they wanted to buy into the fall, the cattle aren't on the ground right now, those are insurable. Modify the livestock ownership to 60 days prior to the end of the insurance period. That was 30. So an example is the end date is October 1. The earliest market date of those cattle would be August 2nd. Premium is no longer paid up front, billed at the end of the endorsement. So that's a big change. Previous to this, if you bought an insurance policy today, you needed to pay for that LRP policy the day of the purchase. And so now you can do it at the end. And also that allows, if there's a loss, then if that premium is not paid, that loss would be applied to your premium. There was also changes where it increased your herd limits, the feeder cattle and fed cattle, 600 head per endorsement and 12,000 annually. That was 3,000 prior and then 6,000, so it doubled. And there's added endorsement length options for swine up to 52 weeks. It doesn't pertain to us. And then I put a note on here where there's a link to those actuarial that you can click on here and be able to go in and find the coverages and prices daily. If you are the application process, if you are interested in looking at an LRP policy, visit with your agent to review those policy details. It's a one-time application. You fill that out one time. At that time, you're not obligated for any premium or take the insurance, but you're just ready to buy. So that's basically one step closer. One step eliminates one step when you are in that mode of buying the endorsement. And at that time, the agent will complete your coverage endorsement, and then that's when insurance will attach. And if you are wanting, you can go ahead. I have that link on there if you want to track those prices. But if you want your agent to track the prices, let her know your break-even price, and she can check those for you daily and text you or call you on what those prices are. Insurance available, LRP insurance is available Monday through Friday, 9 o'clock in the 3 o'clock in the afternoon until 9 o'clock the next day is sales closing. So Friday, your sales closing would be on Saturday, 9 a.m. in the morning, and then Monday sales closing would be 9 a.m. on Tuesday. And that's all I have for the LRP and any crop insurance. And if there's any questions in the Q&A, I can take those now.
Thanks, Carla. We did have one question that came across here in regards to quality loss option. And Troy, if you don't mind, maybe turning on your speaker, I'll probably have you expand on that. Thanks again, Carla.
Thank you.
I'm gonna pull you up here real quick, Troy. So the question, I think you're in the loop here, hopefully if you were monitoring the Q&A, but maybe you could expand on it for this producer down in the mod area that's looking for more clarification on the QLO.
Yeah, the quality loss, the question was, you know, does it go back? And there's kind of two sides to that, or two answers I have to talk about on that. We will go back with the quality loss. We can adjust production that was reduced in prior years. So if you had a 2019 claim that had production reduced because of quality, the APH yields can go ahead and get changed to the pre-quality loss amount. But we're not going to go back into the 2019 crop year or the 2020 crop year and update that APH. Your APH changes will not be made until the 2021 crop year. So for this year. So we are making changes in the APH based on this quality loss option now in the current year, but it does allow for prior years production to be revised or changed based on pre-quality production.
Sure. Okay, thank you for that clarification. I think it's, yeah, the database will change going forward, and it's retroactive in the sense that any prior years can be positively impacted by that adjustment or by that change, but there's not going to be any reopening of claims for 19 or 20 as a result of it. It's going forward for 2021 and beyond. That's
exactly right. Yes.
Okay. Thank you, Troy. All right, everyone, we're coming up on 2 hours here of meeting time. I once again want to thank everyone for all the presenters today, for Troy and for Tori, for Carla for coming on and helping facilitate the meeting and presenting today as well, and for Kurt, who's long ago signed off already. But thank you to all the presenters. And for you growers that are still viewing today's session, I do just want to point you toward a link here. In our Q&A box, we did provide a link earlier today under this published tab, but there's a link out there, well, two links actually. One link is what was provided by Kurt Freilich earlier today in the presentation that will take you out to the ARC PLC calculator developed by NDSU. And the other one that's above it, let me try to redo this here. There we go. So there's two links. I'm out on the Q&A box. There's a link out there that you can see here that I'm going over with my mouse for Kurt's or for NDSU's worksheet. And then the other link up above, which you can click on this link once the meeting's over here to go ahead and view this. But this is a presentation by Steve Johnson, a former professor at Iowa State University. It's a little bit more steered toward corn and soybean production, but I think there's a lot of value in this 30-minute presentation as well as it comes to general crop marketing and ideas on ARC and PLC, and the SEO and ECO options that Troy referenced in his presentation as well today. So if you would like to, that link is out there as well for you, for your viewing pleasure if you care to take it in. Once again, we thank you for your business, we thank you for your time and for participating in tonight's meeting, and we look forward to seeing you all soon. Thanks a lot and have a great night.